Hi, this is Zach from Zach's Traders Cafe with a look at the major markets for Monday, the 6th of June. Starting off with the FTSE 100, and despite the dire situation as far as the US non-farm payrolls, gold going up probably saved the day for this index. We had 6150 or the 6150 zone as the notional support. That's the area of the 200-day moving average. You can see that there at 6147. Also an uptrend line there from February as well. So really back in that trading range between 6150, 6300. Wait for an end of day close outside that or trade the range. The bounce off RSI 50 is, though, a leading indicator on the upside, so that may be something to bear in mind. On to the DAX, and here it was probably more interesting in the sense that we had that the floor of the gap from last month at 10,077, the low of Friday 10,040, so basically a gap fill rebound is what we've got at the moment. We've also got the 50-day moving average at 10,019 as well, so plenty of support between 10,000 and 10,050, let us say, and really while there's no end of day close back below the 50-day line, one would be buying the dips, also on the basis that the shock figure is something that normally gets the powers that be to make sure that the stock market will not go down in the near term. On to the Dow, where obviously the payroll figures were the most heavily related to this market. What we've got here is a continuation of the recent consolidation, just revving up to try and break this line from April, running at 17,900 or so. Basically, we're between the 20-day moving average at 17,701 and 17,900. So really trading the range or looking for a break. Either way would be the thing to do. The RSI 53, though, suggests that we will actually resolve this to the upside, especially given the way that a shock horror figure like Friday's wasn't able to knock the market. So therefore, it's difficult to see what, apart from a rather ugly geopolitical development, would cause this situation to break down. On to the S&P, and this was, if anything, more bullish than the Dow going into Friday's figures. We had 2070, the 50-day moving average level, as the notional support and buying on dips towards that level. We had a dip to 2085, but really quite modest given how bad the data was. Clearly the market made up its mind that there won't be any rate hikes, so bad news is good news, and really well above the 50-day line up to the previously suggested target at 2200. On to the NASDAQ, and here it's the same. Basically, Friday's price action just narrowly took out Thursday's support, but we're still in that range either side of 4,500 and looking for an eventual target as high as 4,800 later in the summer. Stop loss on the buy argument at the moment, 44.42, which is the 50-day moving average, although you could have it as tight probably as the 10-day average, 44.72 on an end-of-day close basis. On to the currencies, and for cable, obviously the shenanigans with the referendum going on, but solid support there, 3-day support at the 50-day moving average, 144.19, really suggesting that that's it as far as the downside is concerned, and we're back up to the top of the range, 147. Obviously, if you're cynical, you wait for an end-of-day close back below the 50-day line, or a momentum trader would be looking for 147 plus before pressing the buy button and looking for a 150 plus target. Onto the euro. Here we've got it was a big beneficiary of Friday's data, rising through the 50-day moving average, which now at 113.12, which was suggested as a target, while we held above the 200-day moving average at 110.96. So the technicals did actually work quite well here. RSI 57, so still looking for a new leg up now towards that last May resistance one, or just around the 114.46 mark. This stage really only back below 111.90, the floor of the December price channel, outright negative for this market. On to dollar yen, and here the situation is that we did effectively repeat that bull trap, 3-day bull trap through the 50-day moving average seen at the end of January for the end of May, and fallen quite sharply. Looks like it would be difficult to avoid a test of 105.54 over the next session or two, even if we then go back up again, which probably seems to be the most likely scenario given how keen the Bank of Japan are for this cross to be as weak as possible, i.e. For dollar yen to be as high as possible. Going on to gold as the last market, the fireworks really here. It was interesting that we had this market really breaking back below the 1208 March floor, but then remaining above it for almost all the time, just a very, very brief one-day dip effectively below that level. And so that did flag that this market was going to go higher. 50-day moving average at 1246, and end-of-day close above that should be enough then to take us back towards 1300 and fulfill the dreams of the bulls. Only an end-of-day close back below 12, well, the 10-day moving average at 1221 would really delay the upside scenario now. That's it from me. More updates at the same time tomorrow.